You're watching the news, seeing US stocks break records, but you're missing the world's greatest investment secret. We're pulling back the curtain on the international and frontier markets, the places where global growth is actually happening. What exactly are they? International markets are simply developed countries outside of the US, like Japan and the UK. But frontier markets are the real secret. These are smaller, rapidly developing economies, like Vietnam, Kenya, or Bangladesh, that are considered too new or too small to be classified as emerging markets. Their classification is set by major global index providers like MSCI and FTSE. For those ready to explore, you can invest directly through exchange-traded funds, ETFs, that track specific indices like the MSCI Frontier Markets Index or the FTSE Global All-Cap ex-US Index. The market is underestimated because big institutional money struggles to invest there due to low liquidity, which means assets are difficult to buy or sell quickly without significantly changing their price. This creates a massive opportunity. Frontier economies are expected to outpace both emerging and developed markets in GDP growth for the rest of this decade. The results are undeniable. Over the last 3 years, countries within the frontier group, like Vietnam and Mauritius, have delivered exceptional returns. While US earnings grew around 26% over 2 years, many frontier companies saw double-digit earnings growth, meaning their profits increased by 10% or more in the same period. So, what are the signs that separate a high-potential market from a high-risk gamble? Look for countries committed to political stability and regulatory reform. Clear rules protect your investment. Next, focus on rapid demographic change. Look for countries with a young, growing, and increasingly educated working population that boosts consumption. Finally, examine infrastructure commitment, as new roads, ports, and power grids create the foundation for explosive economic expansion and investor confidence.